Hey YouTube, so I wanted to start off with kind of what my first video. What I had planned on was the IPDA data range that we had going for Dixie. Truthfully, I got a lot of it from the Discipline ICT trader on Twitter. I'll be sure to link this tweet as well as his picture for it and everything like that. All credit's going to go to him. But he did help me out a lot with just his old IPDA data range he had on GU, GBP, USD, and Dixie going through kind of October through November. So I do want to kind of walk through this one as well, let people see how he got to where he's at and go from there. So this is on ES, so starting there. If you look at the monthly, kind of just from top-down analysis, what do we think price would want to go for, either monthly high or monthly low? We did take this month by about a little bit, about by 5 points or so. So we are assuming that we should see some downward prices for actual draw and liquidity to our previous months down here. Now, with that said, when you're on IPDA and you're trying to get the data range and everything like that set, what you're really going to be looking for is the most recent break in market structure, which if you are following here, we get kind of a break up, another break up, get some equal lows here, and then we get the breakdown here. So once that happens, that is where we'll start calibrating IPDA at in the beginning of that month. So with that month starting and that break occurring in December, we're going to calibrate from there for our actual IPDA data range for our look back and our cast forward period. Now that we have that, we're going to start drawing out the last 20, 40, 60 trading days and marking out any highs from there. So if we go 20 bars here, and then another 40. And again, we're going by bars and not so much the actual date, because the bar is what tells us how many trading days has occurred, not how many months or anything like that. So we'll fix that guy up. Whoa. Okay. So with that said, if this is our current range for at least 20 days, we definitely have some good sell side under here. In our 40 and 60 days for a low, our 40 would ideally be here as well as here. And it's pretty much going to be the same since we don't really have any pivots in the 60 range, but not in the 40. Our true open float 60 days is going to be under 35.02. And same kind of thing on the buy side as well. We really have just these relative equal highs here in our 60-day point from September. That's really the only high that you'd be looking at for the open float. It would pretty much end up being up there. Now, if you want to assume that we're still going to be looking at lower prices on the actual indices and for the monthly and everything like that, what would be the path that price would want to take, knowing that we're going to have about 20 days of the month and we're looking for lower prices? So if you think power of 3 with the accumulation, manipulation, distribution, we can definitely should be able to see something possibly along the lines of this, where we move up to start off the month, possibly even trade up here, or at least fill this fair value gap, FVG, and then eventually distribute lower to, you would assume, at least the 20-day low, which would put you under 37 for the month. And the reason I like using IPDA so much, and what it really helps with, is giving you that daily bias that I think a lot of people might be missing when you're going through it day by day. When you have the data ranges and everything like that laid out for you already, one of the things that ICT said that really settled with me was there's not really a lot of options that price can actually go to. Like, it's really only 2 or 3 conclusions, truthfully. So you have those ideas open to actually execute on, but you're not going to have like 5 different options or anything. That there's really, like, if you're looking for lower prices, this is probably the most likely thing that you're looking at for letting the whole month play out, as well as giving it more time, and not just some kind of instantaneous move where it's just like, yeah, we're going down. Well, if we're going to go down, we need to do that over the course of a power 3 monthly candle, right? Because we're already kind of see that we are still reacting off this order block, and we do have an order block up here that clearly grabbed liquidity on the weekly from the CPI report. So if we're looking for anything like that, we should expect some kind of retracement upwards for the manipulation phase to start off the month, and then the distribution lower to attack the sell side under the previous month's low of December, as well as, you know, pushing towards November's low as you start marking towards, you know, 40 and 60-day IPDA range. And it's pretty much going to be the forecast that I have going for the next couple months, and just seeing if this data range plays out Very possible it just says, nah, just go up. That's totally fine. But just using ideas of draw and liquidity and power of 3 for the month, that's basically what we're going to be looking for. Especially if you look at December, the way that delivered, it was very, very similar. Kind of look on here. You can see December started off right around here. We opened up, went lower, traded higher for the manipulation phase, and then distributed lower for the rest of the month. So we're really looking for the exact same kind of thing to occur for January as well. But that means we need to be possibly bullish for the first couple weeks of the month, and then switch over back to bearish, knowing that our higher time frame draw is still going to be down underneath the sell side liquidity here. And if anyone has any questions or anything like that, you can always reach out to me in the comments. Anything like that, be sure to like, comment, subscribe. Thank you for watching.